Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee. I'd like to share with you a couple of fractals. Back in January, February, and March, we had price putting in a very common looking upward pointing wedge. And this was broken to the downside, and the ensuing damage occurred. Ladies and gentlemen, there is a CME gap at 3.55K approximately. The saying says, these gaps are always filled, respectively. How could that happen? How could the price go there? Well, let's look at the fractal. We have an upward pointing wedge. And I think we're seeing something that isn't that too different. So what will signal that a decline that would attempt to cover the gap occur? And that would be based on price breaking to the downside below the lower green wedge trend line. So what needs to happen to signal that the fractal will continue? Price will have to break to the downside this lower green support line. What is the likelihood of that? Well, let's look at the RSIs. In the RSI, we see that at this point, we had a high on the highest point of RSI. Price then went higher, but the RSI fell lower. This, ladies and gentlemen, is a bearish divergence. Where else did we see that? At this point, right here, RSI peaked. But price did not peak because it made one more incremental higher high on a lower RSI. That, ladies and gentlemen, is a bearish divergence. What does this represent? A phenomenal generational opportunity to buy potentially at 3.55K. At hedging.com every day, weekday, weekend, holidays, hell, even when I'm on vacation, actionable analysis is provided 365 throughout the year. Have a great day.